Good morning, welcome to the market view for Monday the 7th of April 2014. Starting off with the daily chart, we can see the market moving lower on Friday, trading down towards the, let me just pull this data window up here, trading down to the 165.50 area, which is also between the 62 and 76% retracement area. The market's taken out this one, so I'm just going to delete this. So at the moment we're seeing a bit of strength. The market trading between the 165.50 and 166 level there at the moment. So a bit of strength on the overnight. I'm just going to remove these as well, so we get an indication of where we are at the moment before we start projecting where the market is likely to go to. So here the market sideways on the overnight. This is the Sunday night, early hours of Monday morning. And just in case the market moves higher during today, let me just draw in a couple of upside targets for you. We've got, not that one, let me just cancel that one. Just delete that and start again. We want the high of this bar down to the low of this, and this is where the market is likely to move up. I'm not going to put any more on the chart at the moment because it's a fair old distance at the moment based upon the low average daily trading range that we're getting at the moment. You can see how narrow these price bars are compared to January, when we had some really big moves in the market there. So at the moment the market fairly quiet, and this is reflected in the what we're seeing in the intraday time frames as well, in particularly the 30-minute. Just before we have a look at today's action, let's just recap what happened on Friday. And this is quite interesting actually, because I don't know why this is actually stopped out, because in the recorded version, this trade wasn't stopped out at all. It actually produced a profit. So let me just check a couple of the settings and I will be right back with you. Actually, I've just worked out what it is. It's because this PTP didn't actually quite make the 20 pips. And what I'm going to do is just to show you that. So you can see it just traded down to 18 pips, which is very important, which I'll go through now. We've got the first trade that produced a 14 pip loss. The market, even though it was at the previous support that we're drawn in with these two red lines, you want to see Thursday's market view as to why these lines were drawn on the chart. The market held at these, came back, it stopped it out first as the market came back towards these lines. So we were stopped out for a 14 pip loss there. The market then traded lower, filling the sell signal, then came back again about 76%, put in a second sell signal, and the market made 20 pips on this and 18 pips on this one before the news was released. Let me just delete these lines just to reduce some confusion now. So we lost 14 on the first. There was 18 pips on the second trade, just prior to the non-farm payrolls. And as I said in Friday, this is one that you want to get out of the market when it is released. A lot of the others, it doesn't really matter, but non-farm payroll, CPI and unemployment figures, you want to exit stage left prior. And about 2 minutes before, the market was sitting in an 18 pip profit, and it's not unusual for me to stay in the market that sort of close to the wire and then get out beforehand. So we had 20 pips on this one, 18 pips on this one, even though it shows black, and it shows black for the very simple reason that the market came up and closed above the stop, but of course having already traded down 18 pips there. So the non-farm pay figures are released, the market moves higher, it then starts to come back, and we have another sell signal. Unfortunately, this one was filled, and the market then turned around and went back up, and as Murphy's Law would have it, the market then returned back to break even later on. In fact, I've drawn that on the wrong bar. Let's pick the right bar, it would help. There we go. So for a 20 pip loss, on this particular trade as well. So we had 14 pip loss there, picked up 18 there, so that left us with net 4. So overall on Friday last, with the unemployment figures, unfortunately left us with a net loss of 6, where are we again? 14, 18 plus 4, so minus 16 on the day there. So again, the market's just stuck in this horrible, nasty sideways range there. The only movement we had actually was with the economic news item, which is a 50 pip move, which you can see from the grey shaded area here up to here. So that was it for Friday. Not looking particularly brilliant this morning at the moment. It's just the way the market is at this time, and there's not an awful lot we can do about it, except continue to trade the signals as we actually get them. So the market stuck in this sideways range, very, very tiny range on the overnight market as well. Let's see what news we've got. We've got absolutely no news today either, so it could be a choppy sideways day, which is of no help at all. However, that said, on some occasions when there is no economic news, we can get some decent moves in one direction as well, because there's no news to stop the direction that the market's actually trading in. So not an awful lot around there today. On the 60-minute chart, you can see same thing for Friday, where we tried to go shorter. In fact, there were profits. There would have been profits on this one, not too dissimilar from the 30-minute prior to the news actually coming out as well. But there you go. You can see how tight the range is at the moment. Very, very tight. When you consider that the shaded horizontal lines are 50 pips, you can see that we're barely getting 20 pips at the moment, which is an absolute pain, but there's nothing we can do about it. We can't force the market to move. Right, let's hope there's a bit more activity today, and I will see you in tomorrow's market view, all things being equal, of course. Have a great day, and as ever, thank you for your support and also for watching.